It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
And welcome back to Trading Stocks Made Easy. It is I, Tyrone Jackson, the wealthy investor. You just keep showing up and showing up and showing up for the show. And today I have a really good one for you. It's called Profits and Losses. Profits and losses. All right, let's be realistic and honest with one another about trading in the stock market. You ready? At the end of every year, you will have profits if you're a covered call writer. And at the end of every year, you're guaranteed to have losses. I know, nobody wants to talk about losses in the stock market. How could that happen? And here's how it happens. As a trader in the stock market, we never really know what stocks are going to go higher when we purchase them throughout the year. That means as a trader, there'll always be one stock that moves against you. It's nothing personal. It's just that when you're buying companies that are growing their revenue in the middle of the year, it takes one bad earnings report and Wall Street will abandon that stock. Now, while you're jumping in and out of it as a trader and that earnings report shows up that dissatisfies Wall Street, your favorite new friend, your favorite new date in the stock market will disappoint you. Why? Because they'll say something along the path of growing that Wall Street doesn't like, and the institutions will abandon that stock. That's going to cause you to have, certain feelings about that stock because you may own 1,000 shares at $60. That's $60,000 invested in one company for those of you who haven't done the math. Now, those shares, as Wall Street abandons the stock, are going to start to decline. Your trading investment of 60 will go from 50 to 40, maybe even down to $30,000. For most novice traders, this is a shocking experience. Hey, all of the indicators were there. The 5-year trend was there. The company is rising. And just like that, the shares can start to decline? Yes, just like that, it happens to every experienced trader every single year, including myself. Now, loss is an interesting thing psychologically in the stock market because if your expectations tell you you're never going to lose any money, that's unrealistic. There's always losses. But I'd always talk to you about having a millionaire mindset. Do millionaires lose money in the stock market? Of course they do. Do billionaires lose money in the stock market? Of course they do. None of us are imperfect. So we have to talk about how to use losses to your advantage. And that's what this episode is all about. Did you know in the stock market there are advantages to losing money on companies whose stock price move against you? You see what I'm talking about? I often say to you in this program, your wealth is in your thinking, and all of the money that you earn in your life is really based on what you believe is possible. So if I introduce the idea to you that losing money is actually a strategic advantage if you plan for it, what are your feelings about that? Well, this is yet another reason why getting the right financial education is crucial before you open your online brokerage account, because if you plan for losses and learn how to use them, you can take a loss and move on and start making a lot more money. So let me give you some examples that sometimes throw some of my students when it comes to losses. But if you think about it, a loss can be used to your advantage. Let's say hypothetically you've been selling covered calls in the stock market, pulling in that guaranteed income on Dow stocks and S&P stocks, and now we're in the month of December, and you've added up all your trading profits on the year, and guess what? This year you made $100,000 so far in trading profits. Now, in the month of December, we're not going to add up our gains right before Christmas. We're going to add them up the first week in December to see if any losses that we have can be used towards our gains. Well, think of it this way. If you're ahead $100,000 in stock market profits and you have one or two stocks in your account that are down $25,000, when is the best time to sell or dump those stocks? Well, first, let's take a look at the math. If I pulled in a gross profit of $100,000 and I sell one or two stocks whose losses total $25,000, I would have a net profit of $75,000, right? Gains of $100,000 minus a $25,000 loss. Now, what's interesting about the $25,000 loss is it can be used for tax advantages against my gain. So let me explain this to you, and I'll try not to go too fast, but this happens to be yet another subject that I really like, and sometimes when I'm standing here in the studio, I just get a little excited. So let's take a look at it this way. And this is why, by the way, if you're trading in the stock market at a six-figure level, you need to be working with a financial tax advisor so that you know how the laws work here. Let's go back to our $100,000 gain. Chances are I'm going to owe 30% of my $100,000 in taxes because your Uncle Sam that is, mandates that if you're trading in the U.S. So of my $100,000, I'm probably going to owe about $33,000 in gains. What kind of gains? Short-term capital gains. Well, if I had some losses, I could reduce that $33,000 tax bill, right? So if I have $100,000 in gains and $25,000 in losses, you would think initially I'll be able to deduct the $25,000 in losses. Well, as it turns out, about a decade ago, the U.S. Congress got hip to this intentional loss thing to reduce your tax bill. So if I take that $25,000 loss for this year, the United States government says, okay, you can take the $25,000 loss, but it's spread out over a period of time. We're going to cap that loss at $3,000 this year. However, every year going forward, you'll be able to write off another $3,000 until you get to that $25,000 in total. This is called a loss carry forward under the tax law. Okay? So, although I took $25,000 in losses, I can only claim on my tax return $3,000 per year. But here's the interesting part. If I take a $25,000 loss and I sell a stock at a loss, that capital gets redeployed back into my account. Now pay attention because here's that financial education at work and the ability to do math. You see, if I lose $25,000, but I free up $40,000 in cash, I can take the $40,000 and do what? Put it back into the stock market. Instead of a growth stock that pays no dividend, what am I going to put this money in? A stable Dow stock that pays a dividend, and I'm going to start covered call writing on that. Now, I can't tell you how many times I teach this live, and it's an eye-opening experience for a lot of people. Why? Well, if there's some way I can take that $25,000 loss and towards the end of the year start trading it in a Dow stock, do you realize I can make that $25,000 back in the last 3 months? That's right. See, I know in this scenario I asked you to think about assessing profits and loss in the month of December. In reality, the best time to do it is June, July, maybe September. Why? If I'm staring at a loss in the month of June, if I redeploy the capital after taking the loss, I can make that $25,000 loss back within a 3, 4, 5, or 6 month period. So when's the best time to take a loss on a stock that you're down on? June, July, September, maybe? Why? Because you can give yourself time to make that money back through another trade. You can't do it through just raw trading. You have to do it using covered calls. So when I sell off my stocks that are experiencing a loss, let's say in June or July, I'm willing to take the $25,000 and redeploy that capital back into Dow stocks, something that pays a dividend and has an established record of earnings, because I'm really working on regaining my $25,000 through trading. Now, for those of you who understand extrinsic value of call options, if I'm seeking to make back in whole or in part my $25,000, you had bet your bottom dollar I'm selling 4 to 6 week cover calls. Why? I need larger premiums to come in, but while I'm doing that, my dividend checks are going higher. So you see, the only thing that prevents people from taking losses on a particular stock are their feelings, because they haven't done the mathematical analysis to say, if I take this loss right now, how can I get that money back from the stock market? You can't do it through volatility trading, but you can do it through extrinsic value of out-of-the-money call options. So you really don't ever really have to take a sustainable loss within a calendar year if you know how to extract and get the money right back into your account, in whole or in part. Taking losses are what professional traders do. They do it all the time at hedge funds. They do it all the time at college endowments, because no matter how much research you do on a particular stock, guess what? You can't guarantee what the next earnings report is. So you see, if you want to be really good at this game, you have to accept profits and you have to accept losses. It doesn't mean if you accept a loss that you're a failure. It means you're an expert at moving on. How are you going to make a lot of money if you don't lose some money along the way? You see, losses in life teach us how to be experts. Losses in life teaches us all how to be winners. Losses in life teaches us how to overcome pain so we experience great victories. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Welcome back. In this episode, we're talking about profits and losses. That losses can be made up if you take them strategically at certain points during the year, and you can move on to profits. Now, let's take a few minutes and just talk about losses in general, outside of the stock market. Have you ever been in love with someone, maybe in high school or in college, and it felt really good, but for one reason or another, they broke your heart? Well, the question becomes, what did you learn from that loss? Or were you one of those people after your college relationship broke up where you said, I'll never love again, and you were correct? Most people experience losses in relationships. The ones who have the greatest life are the ones who learn lessons from that loss. Maybe she really wasn't that into me. Maybe she wasn't a loyal person. Maybe he lives too much in the fast lane. Or maybe just what was I thinking? You see, you only realize the value of a loss in time. Now, let's talk about losses in life. We're all going to lose at some point someone we love. Does that mean we stop living? Most of us are going to lose our parents and grandparents and maybe even, unfortunately, a pet. But does that mean that your life doesn't go on? You see, we take from losses the value we assign on them ourselves. I remember some of my greatest losses. Why? Because that's where I got some of my greatest lessons. So when you're trading in the stock market and you begin to learn how much opportunity that is there, what is the most shocking thing when you start to lose money on a trade? It's your expectations. You see, in life, we never expect to feel pain, hurt, or disappointment, but we are totally 100% capable of moving forward. So, you know when you're going to become a great trader in the stock market? When you've lost a little money. That way, you'll know what I mean when I say 1/3 of your money, we call this allocation, should always be in Dow and S&P stocks. Why? They're the lowest risk stocks in the market. They have established track records, and you're collecting dividends on an annual or quarterly basis. The reason that rule is there is so that if you ever experience a loss, it's counterbalanced in your portfolio with long-term gains. You see, it's like a puzzle that fits together. When you hear me talk about some of these traders on Wall Street who take home $35 million bonuses, yes, there's quite a few of them that make $35 million in just bonuses alone. Why have they been compensated at that level? Because they're experts at managing profits and losses. They learn how to move on from bad trades and make millions of dollars in trades that are profitable. You know, in baseball, there's something called the sacrifice fly. Why was the sacrifice fly invented? To advance the other runners around the base. So what if the hitter gets up and he's struck out or is tagged out? As long as the runners on the bases advance, the sacrifice fly is a number one tool for winning. In life, what do you focus on? Are you the kind of person who focuses on losses or lessons? Losses or lessons? And what I'm hoping to do with your mindset is to prepare you for the idea there'll always be losses if you learn the lessons. So right now, you're empowered, perhaps in a way that you hadn't thought. Maybe you thought this episode was all about making millions and millions and millions of dollars. And a lot of the episodes here on Trading Stocks Made Easy are targeted towards that goal. But you have to accept that there will be losses along the way. Now, here's the good news. If you're taking your call option premiums from covered call writing and investing in Dow stocks, is it possible you may take a $25,000 loss, but your account value has risen $75,000 or more? Of course. Why? Because as long as the stocks that you are holding for the long term are advancing, guess what happens to the loss over time? The answer is simple. It becomes irrelevant. You see, you have to have the right mindset for success. You have to have the right mindset for happiness. You have to be willing to leave doom and gloom behind and embrace hope, positivity, and greater things in life. And most importantly, you need to adjust your expectations. So on this episode, I want to leave you with this idea to ponder. We know you are going to experience a loss at some point in the future. If you don't expect it, you're setting yourself up for failure. But what if those losses were actually lessons, opportunities to learn and grow? What would that mean for your life ahead? It would mean a great, glorious life filled with gratitude for all of your blessings. Think about the idea of expectations, losses, lessons, and progress. And I hope that you realize that everything in life happens for a reason, and losses are lessons or growth opportunities. I'll see you right here next time on the next Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.